Hello everyone, welcome to the MCQ class on commerce and accounts guys. So we'll be discussing some of the MCQs today for your practice purpose, right? I think a lot of MCQ sessions are already assigned in your course. We have done it in the previous batch also. सर रिजल्ट कब आएगा यार? सही बताऊं तो मैं खुद भी तुम्हारे रिजल्ट का इंतजार कर रहा हूँ, ठीक है, सभी लोगों का. And usually SEBI releases it the result in anywhere around 10 to 15 days, and now let's see. I thought कि इस वीक में आ जाना चाहिए, that was my expectation, पर I can see as of now no such clarity is there, so most probably let's suppose Monday or Tuesday. Okay, I thought कि इस वीक में आ जाना चाहिए, but maybe the result is somehow delayed from the SEBI's side, so most probably by Monday or Tuesday. Let's hope for the best, right? Okay guys, let's start with the session. Good evening everyone, good evening. Let's start with the session. The very first question for today is, let's start with the very basic questions. Okay, yes, I think all the regulatory bodies are, I don't know why they are delaying in the results. It was expected that the results will come by this week only, but let's hope for the best for Monday and Tuesday. Okay, good evening. The question number one, we will start with very basic questions, and then we will start increasing the level. Okay, so the questions will be in a mix of easy, moderate and difficult questions. It's not like that surface to exam is only difficult questions ki practice karwa do, because in examination also there will always be a mix, right, of easy, moderate and difficult level questions, and that's how you guys are also going to prepare. Financial statements differ in manner in which they are presenting the financial information, identifying this distinct to fundamental understanding of the financial reporting structure. Which of the following statement represent a point in time statement? Point in time. Point in time. Very good. Whenever we talk about point in time, it is my balance sheet only. It is my balance sheet only, right? So balance sheet is also called as statement of assets and liabilities. Or can you guys tell me some other name of the balance sheet? Anyone? Statement of financial position. Very good. Statement of financial position also. Right? I can even call it as a statement of financial affairs, right? Statement of financial affairs or statement of financial position. That is also fine. So here the correct choice will be, guys, option D, statement of asset and liability. Why? Because we always prepare the balance sheet on a particular date. Balances tend to change every second, every day. So that's why we have to prepare the balance sheet on a particular date only, and that's why we call it as a point in time statement, because it is prepared on 31st March 2020, say for example 6, so on a particular date rather than a range. Next one, can you guys classify the general reserve? It is a part of which of the following? General reserve is a part of which of the following? Take your time and then try to answer the question. The correct choice here will be, guys, option D, equity shareholders fund, right? Equity shareholders fund. So when I talk about equity shareholders fund, equity share capital, then we do have all the reserves and surplus, which are free reserves, right? And what is the third categorization? Can anyone tell me? What will be the third point? Equity share capital, reserves and surplus. What else? All the free reserves. What else? Okay. Money received against share warrants. What else? What else I can account for? I need to write off all the preliminary expenses, or I can say on a broad basis, all the fictitious assets. So losses not written off, right? Preliminary expenses, all these things I have to write it off. Next one. Financial statements are interlinked with certain figures flowing from one statement to another to ensure internal consistency, completeness of the financial reporting. Which of the following item appearing in the statement of profit and loss account has a direct linkage with the balance sheet? Has a direct linkage with the balance sheet. Take your time and then answer the question. Revenue from operation, profit and loss account, profit or loss, sorry, finance cost, exceptional items, or all of the above. What do you think? Take your time and then answer the question. So, guys, revenue from operation. So, first of all, we do have P&L account. We do have P&L account. Then we do have balance sheet also. Then we do have balance sheet also. In balance sheet, we do have assets. We do have liabilities, right? In the P&L account, we have either profit or loss. We have the turnover as well, by revenue or by sales, by income. We have some finance cost as well, right? So 2, finance cost. There are some exceptional items also, which is just for the purpose of presentation, right? So exceptional items can't be the answer. This is just for the purpose of presentation. So if exceptional items is not the answer, then all of the above will not, also not be the answer, right? Revenue from operation, I will never transfer revenue from operation in my balance sheet. This is not the answer. Finance cost, I will never transfer my finance cost in the balance sheet. But P&L account, whatever my profitability is, let's suppose my reserves and surplus is 100 rupees and I earned a profit of 50 rupees, I will actually transfer this profit and I will start showing my reserves and surplus at 150. So profit or loss for the period will be the correct choice here, right? a linkage, a very strong linkage between profit statement, profit and loss account, and balance sheet is nothing but profit or loss for the period. So in profit and loss account, we do have all the accounts, and the net impact of those accounts are either a profit or a loss. And that profit or loss, we transfer it to the balance sheet, right? That profit or loss, we transfer it to the balance sheet. Next one, depreciation as an accounting charge will not be applied to which of the following asset? Take your time and then answer the question. The correct choice here will be option C. Depreciation is only charged on tangible assets, and here patent is an intangible asset. That's an intangible asset, and intangible assets are subject to amortization. They are subject to amortization, okay? Not depreciation. Next one. Considering the traditional classification of accounts and their treatment at the end of the accounting period, which of the following accounts will not appear in the balance sheet? What do you think? Which account is not going to appear in the balance sheet? Take your time and then try to answer this question. Will not appear in your balance sheet. Outstanding wages, because they are actually outstanding, can I say that it is a liability? I have to pay it. I have to pay it. Prepaid insurance, I have paid it in advance, so that's my asset. Salary payable, again my liability. Commission received in advance, again a liability for me. I have received a commission in advance, that's a liability for me. Assets and liability do come in balance sheet, but rent paid is a expense. Expense directly go in the P&L account, right? Expenses directly go in the P&L account. So here the correct choice will be option E. Option E is the correct one. Next one. Materials and other supplies held for use in production of inventories are not written down below. Their cost when the finished goods in which they are incorporated are expected to be dash. Sold at or above cost. Option B, sold above cost. Option C, sold less than cost. Option D, sold at NRV. Option E, sold at fair value. So here, when we talk about accounting standard 2, it is always about valuing your inventories. So we can value the inventory based on cost or NRV, whichever is lower, but this rule is for only the WIP and finished goods, right? When we talk about the raw material, which is also called as materials and other supplies held for use in production, that means this is the raw material. When we talk about the raw material valuation, how to value the raw material? They are not written down, they can be valued at cost, but we need to check the valuation of finished goods. So if the finished goods are sold at or above the cost, then we can value the raw materials at cost, right? At cost. Next one. For the purpose of the cash flow reporting, we classify some items as cash equivalents. Which of the following item is not included in cash and cash equivalents? In cash and cash equivalents. Take your time and then answer the question. The correct choice here is option D. Here it should not be E, but the correct option here will be option D. Let me just correct it as well. In your PDF, it should be D, not E, right? It should be D. Just give me a second now. The reason I'm definitely telling you why. It's written as well. This D1 is not a part of cash and cash equivalent. Why it is not a part of cash and cash equivalent? Because if you want to classify something as cash or cash equivalent, there are few characteristics that is required to be satisfied. The very first thing is it is convertible quickly in cash within 3 months. So I can see that all the points are satisfying that condition, but it should be having insignificant risk. This is the second condition. And when I was teaching you the chapter cash flow statement, I told you that there are two conditions. Within 3 months is definitely a condition, but it should be having a insignificant risk involved. So I can say it's a combination of both of the things, but equity shares do have a significant risk of correction. So definitely you have an intention of selling it in less than 3 months, but what if the value goes down? So there is a significant risk in it, and that's why it won't be classified as a cash equivalent, right? Next one. Financial statements comprise a structured representation of financial information as prescribed by the accounting standard. Which of the following is not considered a component of the financial statement? Take your time. It's a very simple question. A very straight and a very simple question. Yes. Option E, management discussion analysis is just a discussion and analysis. It is never a part of your financial statements. Your financial statements are balance sheet, P&L account, cash flow statement, notes to accounts. And what is the fifth part? Can anyone tell me what is the fifth part of financial statements? Let's see how many of you are able to recall that concept. Statement of changes in equity, right? Statement of changes in equity is the fifth part. Very good. Next question. Which of the following best describes wages paid to workers engaged in the manufacturing process? Which of the following best describes wages paid to worker engaged in the manufacturing process? That's a straight one. When we talk about wages, it is a direct expense. It is a direct expense, right? That's why we show the wages in trading account, right? That's why we show the wages in trading account. Next one. What is the statement? What is the treatment of contingent liability in the financial statement? Let's suppose if something is a contingent liability, then how will I be treating it in the financial statements? Recorded as an expense in P&L, recorded as a liability in balance sheet, added to the provision liability on the balance sheet. It is disclosed in notes to accounts, or none of the above. I think it's a very simple one, right? So I can say all of the students will be able to answer this question. Now tell me, as per which accounting concept or convention this is applicable? Acha, here the answer will be definitely option D. It is disclosed in the notes to accounts, but as per which concept or convention? As per which concept or convention? Yes, one. I'm just asking the name of concept or convention, not the accounting standard. Which is the concept or convention behind this approach? Very good. Full disclosure. That's the correct choice. Full disclosure. So we fully disclose each and everything. Perfect, guys. Perfect. Okay. It is not conservatism. It is not prudence, right? This is a contingent liability. I can't even record it. Prudence says that record all the losses and expenses, but not the gains and income. I'm not recording anything. I'm just disclosing it in the notes to accounts, and that's why it is full disclosure. Okay. Next one. Which of the following outcome is specifically determined by the trading account? Which of the following outcome is specifically determined by the trading account? It is the gross profit or gross loss, right? A trading account can show a gross profit or a gross loss, right? Perfect. Option C is the correct choice. Option C is the correct choice. Trading account is for depicting the gross profit or gross loss. Next one. Which of the following scenario accurately reflects the correct application of accounting standard 9 for revenue recognition? So here we are having three scenarios. Take your time, read the question. Let me know in the comment section which will be the correct answer. Nidhi, isn't operating profit same as gross profit or revenue from operations? Okay. So I think you are using three different terms. You are using three different terms. First solve this question and then I'll be answering your question for sure. Okay, but first let's focus on this particular question. Everyone, let's solve this one, then I will be answering Nidhi's query. Option A is the correct choice, right? Option A is the correct choice here. Scenario 1, revenue from sale of goods is recognized when the goods are delivered to the customer. That's correct. And all the significant risk and reward are transferred to the buyer now. So that's the correct one. Revenue from interest income is recognized on accrual basis. Yes, we do recognize it on accrual basis. Particularly, we say that time proportion. We say time proportion basis, right? Even if interest has not been received, doesn't matter. I will still record it. Why? Because transactions are recorded in the period in which it takes place, not when settlement in money takes place, right? Interest income is usually recognized on time basis, on time proportional basis, but accrual basis is also fine. Accrual basis is also fine, right? Because we don't care about the cash settlement here. So both these statements here will be correct, but the third one is not correct. The revenue from sale of equipment is recognized when the equipment is ordered but not yet delivered. So we don't use such a kind of accounting treatment. Okay. Now the question of Nidhi. Isn't operating profit same as gross profit? Or revenue from operation? Guys, revenue from operation, this means revenue or your sales or your income. It can never be your profitability. The very first thing, right? Revenue from operation means the entire amount that you have generated by selling your goods and services. If I am a t-shirt manufacturer, I sold this t-shirt for 500 rupee. That's my sales. That's not my profit. I have to incur certain expenses also. So revenue from operation means my sales or income. Gross profit means my sales minus my cost of goods sold. That's my gross profit, right? Which is we are calculating in trading account. We prepare trading and P&L account. In trading account, we calculate gross profit, and P&L account, we calculate net profit, right? So gross profit is a result of the trading account. Is a result gross profit, or it can be gross loss as well. It's a result of trading account. Operating profit is a terminology of ratio analysis. If you guys do remember, we call operating profit as what? Can you guys tell me? Can anyone just tell me in the comment section what is the short form of operating profit? Very good, Nancy. EBIT, earning before interest and tax. EBIT is different from gross profit. Okay, earning before interest, before tax. EBIT. That's what operating profit is all about. That's the difference, right? Operating profit is different from gross profit and revenue from operations. I hope the query is clear now. Right, Nidhi? Is it clear? Any queries as of now in this particular concept? Perfect. Next question, guys. An enterprise reports a gross loss in the trading account for the accounting period. Based on the structure of the final accounts and the flow of information between the statements, which of the following statement is the most appropriate? Let me know which of the following statement is appropriate statement. Okay. Raghu option D, Nancy option B, Sachin option D. What about others, guys? What about others? Okay. Net profit cannot arise if there is a gross loss. If I'm having a gross loss, net profit cannot rise. Incorrect. Gross loss must necessarily result in net loss. Incorrect. Net profit is possible only if the gross profit is reported. Incorrect. Net profit may still arise even if you have the gross loss. Correct. Option D is the correct one. Let's suppose in your trading P&L account, this is your trading and P&L account, you are having a gross loss. 100 rupee loss is there. Okay, so this is your trading account. Now I have to prepare your P&L account. Maybe you are having some income. Maybe you are having some income to compensate for the loss. Let's suppose you do have a 1000 rupees income, right? I'm just carrying forward this one to gross loss, carried forward, minus 100. Still I am having a net profit of 900 rupees. Why? Because my indirect income is there to compensate for my gross loss and even result in a net profit. Definitely in trading account, all the direct expenses and direct income are there. So I reported a gross loss in my trading account, but my indirect income is very much sufficient in covering, in this case, maybe. That's why there is a word may. My indirect income may completely cover the gross losses and also result in net profit, right? So it can be a case. Option D is the correct one. So guys, from this particular question, you have to just calculate the amount of gross profit from the following information furnished by the ABC Limited. Just try to calculate the gross profit here. Okay, guys. I can see total purchases for the year 10 lakh rupees. So I have purchased worth rupees 10 lakh, but I have returned it outwards. That means that is going out of my factory. Something can go out of my factory once it came in my factory. So I must have purchased it. Now I'm returning it. So less purchase return. This is called as purchase return. I have purchased something, but now I am returning it. So less purchase return. Direct expenses, I add my direct expenses. So can I say that my net expenditure is 10 lakh rupees minus 30,000 rupees plus 50,000 rupees, which is 10 lakh 20,000 rupees. So as of now, this is kind of cost of goods sold for me in the absence of any other information. Only one third of the goods is sold. So I have sold only one third of it. So what is one third of it? One third of 10 lakh 20,000 rupee is 3 lakh 40,000 rupee. This is the cost of the goods sold. Now how much I have sold it for? 6 lakh 40,000 rupees. So 6 lakh 40,000 rupees minus 3 lakh 40,000 rupees, nothing but 3 lakh rupees. Option B is the correct choice. So I can say 3 lakh rupee here is the correct answer. Next one, opening stock forms part of the cost of goods sold for the current period, which is the effect of the increase in the opening stock on profitability, other things being constant or equal. So what impact closing opening stock will be having on profitability? Increase in opening stock. The correct choice will be, guys, the profitability decreases. Why? Because the opening stock increases and opening stock is added in the cost of goods sold calculation. So if you are adding some cost, then definitely your profitability will go down, right? In case the balance sheet profit earned during the period is often showed under the head reserves and surplus, and conceptually profit is treated as a liability because of which concept? Yes, it is because of the business entity concept or separate entity concept, right? Business owner is different from the business in itself, and that's why whatever profits the business is earning is nothing but a liability for the business, because business is having an obligation to pay that profit back to the owner, right? Next one. Depreciation involves systematic allocation of the cost of the fixed asset over the useful life. This practice primarily ensures compliance with which of the accounting concept? I'm charging depreciation because of which concept or convention? Matching concept. Okay, matching concept is the correct one, and this particular example we have discussed in the depreciation also. So there we are trying to match the respective expense with that of the related revenue, right? Next one, given below is the information extracted from ABC Limited opening stock, sales return, gross profit, sales, purchases, carriage inwards, purchase return, everything is given. You just have to calculate the cost of the goods sold from the following information. What will be the cost of the goods sold? So as of now, we can see that closing stock is not given in the question, right? So cost of goods sold will be sales minus my gross profit. Sales minus my gross profit. What is my sales? My sales is 56,000, but there is a sales return of 2,000 as well. So my net sales will be 56,000 minus 2,000, which is 54,000. This is my sales, net sales, minus the gross profit. So is 35,000. So 35,000 minus 54,000 will be 19,000, which is my cost of the goods sold. Which is my cost of the goods sold. Acha, from the same question, can you ascertain the closing stock now? As you already know now, what is the cost of the goods sold? So how you guys will be calculating the closing stock? You just have to put each and everything in the formula. You know the cost of the goods sold also now. So you can easily calculate the closing stock, right? Yes, you guys have to just put all the figures in the formula of cost of the goods sold and you will be getting the answer as 44,100, right? So cost of the goods sold is nothing but opening stock plus purchase plus any kind of direct expense minus the closing stock. We know the cost of the goods sold, which is 19,000. We have just calculated in the previous question, so we can easily calculate the closing stock here, right? Next one. An entity enters into a long term supply contract, but due to adverse market conditions, the management expects that fulfilling the contract may result in some kind of losses in the future period. Although the losses has not yet occurred, which accounting principle requires a recognition of such losses that are going to happen in the near future? A very simple question. That's prudence, right? That's prudence, which is also called as conservatism. Next one, depreciation of fixed assets under the Companies Act 2013 is governed by which of the following provision? Acha, I'm removing option E. Now tell me the correct choice. Now tell me the correct choice. To make the question less contradictory, I'm removing option E. Hear me now, guys? No, yes, what is happening? Some people can see me, some cannot. Okay, perfect. Guys, the correct choice here is option B, Schedule 2. We are talking here about depreciation. We are not talking here about financial statements. When we talk about balance sheet and P&L, they are a part of Schedule 3 of the Companies Act 2013. Schedule 3 is a presentation disclosure requirement. But depreciation is as per Schedule 2. Okay, as per the Companies Act 2013. So please do remember this particular concept also. Right? Acha, as per Schedule 2 of the Companies Act, the maximum residual value of an asset shall not exceed what percentage? Shall not exceed what percentage? As per Schedule 2 of the Companies Act 2013, the maximum residual value of an asset shall not exceed what percentage? It shall not exceed 5% of the original cost, right? It should not exceed 5% of the original cost, right? Perfect. 5% is the correct choice here. Okay, guys, so that's all from my end for today. We had a slow start today related to basics of accounting. So we learned some new things also in the basics of accounting, and I'm glad that you guys are able to understand most of the questions and your preparation is going fine. Just keep on revising multiple things every day, and definitely you guys will be able to do well in the phase 2 examination. So thank you so much, guys. Bye bye, take care, see you soon in the next class. We'll be discussing a lot of more MCQs as well in the next classes. Bye bye, take care, see you soon.